Hello, let's go over this week's investing. It's time to sell. Yep. Record bank run drained a quarter of their deposits in hours, leaving it with $1 billion negative in cash. This is the 18th largest bank in the U.S., funded by over $173 billion in deposits. $151 billion are not insured. Wouldn't you like to be in line to get your money now? So this is a serious situation. It's like watching a very large domino fall over. Now, do we see a total crash, absolute mayhem as everybody runs to every bank to get their money out? Or do people become complacent and say, well, these guys deserved it. They don't know what they're doing, so my money's safe. We don't know. The safest thing to do is go cash for a while. Wait a little bit to see how serious this is before you say, I think I'll go short the market right now. Not the time. We'll have plenty of time to make money doing dangerous things later on if it turns out that's a good idea. I just want to look here at the last 3 months of the sectors. Not so good. And because of the bank failure, we have a tick up on common things that jump in a market crash. EDV, the long-term bond, you see how it's jumped up. Tilt, 20-year bond, that's jumped up. Cambrian tail, which jumps up when there's a market problem, has took off. And of course, the volatility down here, VIXM, has jumped a lot. And that's what usually happens at the start of a crash. But it can be a false target also. We wait for a little more strength on that before we try to make money on shorts. That's always a very dangerous thing to do. You're much safer just sitting in cash. Don't worry about it. Don't try to pick up a little bit of money. It's like, as they say, picking up nickels in front of a steamroller. Yeah, you can get away with it for a while. Nothing new here. Nothing. Nope, it's not safe. We're still out. This is on the one that goes back to 1993. From 2006, we have a blow up here, the last signal, and the volatility has jumped dramatically. This is a signal to get out of the market. It's strong enough that even if we didn't have any other bad news, we would say that's strong enough to go cash right now. And so go cash we do. So all the portfolios now are cash, 100% cash. You got that? Sell everything. We'll come back in to pick up what takes off. We don't know if it's going to be silver, platinum, whatever. Some of these may show enough strength to come in, but not. All right. Those that have human interest in their 401ks, it's zero. Whatever short-term bond you can get, which is the closest to cash, sell your VIGAX right now. Merlin, you've got two things to sell, your COMEX and your PGOEX, and then buy 50 of the PRRIX and 50% OGGQX. Okay. And for those that have mutual funds like Merlin, you can always go to Morningstar and look at one of them and then compare them to the other funds you might be interested in. So we're looking at all four of the main funds in Merlin, but you can do this with your own things. And you can see that the stock and commodities funds are both going down. And then the bond funds are coming up, the bonds and income fund. So since you can't go cash, you have to pick something. So we're going to go 50-50 on these two that have just shown an uptick while everything else is going down. Last 6 months, the green line equity, you see it has just turned down because nothing's working. And I don't want to jump on just doing market shorts just yet. So we want to go cash. Same line, we did fine, but this is a pretty fast drop. Don't want to see how far it goes. We're out of the market now. We'll wait and see. We're going to get into the timing signals now. Basically, here's the word, go cash. Our 200-day percent moving average, long term. All right. This is the Russell 1000. It came and signaled sell here. Then the S&P 500 signaled sell. And now the QQQ has come down far enough for a sell. So we hung on as long as we could, hoping that this was not a continuing trend and it would turn around and we could stay on our investing. But no, we have crossed the line. It is a sell on long term. There's our long term sell. The short term volatility, look at that. That is serious. It's a very fast rise, similar to the rise down here. And we had a very nice drop. And so, getting out at that sharp point was the right thing to do. Go cash when you see this sort of a thing.